Bueno, muy
Good afternoon and welcome to this press briefing of the IMF on the outlook for Latin America and the Caribbean. Together with us in order to present this, we have colleagues from our Western Hemisphere department, and I will begin with Alejandro Werner. He's the director of the West Hemisphere department of the IMF. To his left, Patricia Alonso Gamo, the deputy director of the Western Hemisphere department. To her left, Simo Sen, the deputy director of the Western Hemisphere department. Then on the other side of the table, Krishna Srinivasan, who is also a deputy director of the Western Hemisphere department. And lastly, to his right, Nigel Drock, deputy director of the Western Hemisphere department. I believe that Alejandro will have some introductory remarks to make, and then we will be pleased to take your questions. Thank you very much. Thank you, Rafael, and good afternoon. Thank you for being with us. Very quickly, as you've seen, we are projecting a growth for Latin America in 2019 of 1.4, after the region grew by 1% in 2018, and we are anticipating that this will continue toward 2020 with expected growth of 2.4 that year. For 2019, the reduction was due to the slowdown that we saw toward the end of 2018 and the slower global growth that we are expecting for this year. In 2020, the acceleration we had expected has been driven by more consumption and, to a lesser extent, increased investment in more countries of Latin America. From the standpoint of external conditions, we are not anticipating that the price of commodities or capital movements, capital flows will have an important impact on the performance of our economies this year. It will be inertial, and as we will see later on, this will be an important risk for the region. The recent change in the tone of monetary policy in the United States has led to a global environment in the financial market, in the financial sense, more important for the region. As you know, economic growth is we are projecting will be stronger in Brazil, and we are also revising upward a lesser economic contraction in Argentina for 2019, and we are revising downward slightly the expected growth for Mexico in 2019. In Argentina, we are projecting that the economic recession in 2019 will be of minus 1.2%, a revision based on a 1.7 as a level of contraction in our recent projections. Basically, this reflects a gradual increase in consumption and better performance in the agricultural sector in 2019. In Brazil, we are anticipating an acceleration which reflects basically the cyclical continuation of the slight dynamism we saw last year in conditions where the monetary policies have been aiding economic growth. In Mexico also, the inertial projection, given the weakness seen in investments in the last 36 months and the lower growth data in the last quarter of last year, that explains the slowdown we see of 1.6% for 2019 after the economy had grown by 2% in 2018, and we are expecting an acceleration of almost 2% in 2020. This also reflects the slowdown that has been observed in the first few years of an administration in that country. The situation in Venezuela continues to be one of an economic crisis unseen in our continent in recent decades. The main focus now is the humanitarian crisis seen in that country. And obviously the main effects of this on neighboring economies and the other economies of the region can be seen in the levels of migration, which we have seen now for several years, especially toward neighboring countries. But we also see an increase in the number of Venezuelan migrants in many countries of Latin America. As I've mentioned before, the risks in these terms are domestic as well as external. In terms of domestic risks, high levels of uncertainty on public policies in some of the main economies of the region. On the international level, lower economic growth would affect the region, and obviously trade tensions, if they were to intensify, could have important effects, especially in those countries which are more integrated into the international economy. Natural disasters, as always, are an important factor, especially in small economies in the region, and especially in the Caribbean. In terms of policies, as we have mentioned before, the region continues to show an important trend that it must follow to reach sustainable public finances, and depending on the fiscal space in each country, this fiscal consolidation will take place faster or slower. We have seen that most of the economies of the region are showing inflationary levels which are within the stated ranks or ranges, and this will be below the neutral interest rates, and the normalization of monetary policy in that regard can take a long period of time, which means that monetary policy will be driven economic policy in an important way, depending on financial deepening in the economies. As we have repeatedly stated, Latin America is one of the regions of the world with lower potential growth, and that shows the need to continue to make structural changes to increase investment, to increase productivity, and obviously to strengthen institutions, to improve the operation of markets, but especially to invest in human capital and to continue with policies that improve social protection and income. These are key factors to improve the growth potential of the region. And lastly, just to remind you that on the 5th of April, our council approved the third revision of the standby agreement for Argentina, and on the 11th of March, we approved the program for Ecuador by $4.2 billion. It is just now starting, and we have seen favorable effects on financial markets with an important reduction in financing costs for that country. Thank you very much, and we are available to take your questions. Thank you, Alejandro. We are going to try to respond to all of your questions and concerns. I will begin here, and then we will go to the other side. Carolina. Oh, you have a microphone there. Good afternoon. Growth for Venezuela is extremely high. To what extent does that trend, if it goes on for many years, could really bring the region into it and not only create financial collapse in Venezuela? Yes, in fact, the fall of product in Venezuela has been one of the highest ones, 18 below last year, minus 25 for this year. These are very unprecedented falls in the oil sector and the non-oil sector as well. And there's also the migration factor. We don't think that will have a major effect on the region because trade and the other flows are almost at zero. Thank you. Here in the second row, Yolanda. Good afternoon, Yolanda Morales from The Economist. Dr. Werner, you are saying that the revision downward in growth levels for Mexico is based on the 36 months of investments downward, which we have seen. But the Minister of Finance has told us that they are maintaining their expectation of a 2% growth based on a gross investment which went up in January. And also, you're saying that you hope that investment projects in the southeast for infrastructure will attract investors. I'd like to know whether you took into account the positive impact that these projects could have, the Maya train, the interstate train, and whether this wouldn't stimulate the economy. And a second question, if you permit, there's going to be a request for changes in Congress for stabilization funds to increase resources for Pemex. I'd like to ask whether this presents a risk for the government's savings in order to address emergencies. Thank you.
So let me answer in English. So the outturn for Mexico revised down for 2019 and 2020, and that reflects a bunch of factors, not just one. Of course, the Q4 in 2018 was weaker than we expected, and there's a carry forward from that. And if you look at high-frequency indicators in 2019, early 2019, they've also been uninspiring. So that's a revision. That's one reason why we revised down. We've also reflected the fact that growth prospects in the U.S. were marked down. So that's one. And the first factor reflected some tightening in financial conditions in Mexico. And of course, there's generalized uncertainty about, when a new government comes in, there's uncertainty. And that's also been factored into our growth revisions. Going forward, if any of these investments take off, and if uncertainty dissipates and investment picks up, which is what one would hope, then we could see a pickup in growth much sharper than what we expected. But again, that has to be seen. You asked a question about stabilization fund for Pemex, is that what you said? Yeah, so I think when it comes to Pemex, I think there are two issues here. One is a short-term issue and one is a long-term issue. The way we see Pemex is what we need is a credible and comprehensive medium-term strategy, business and financial plan. And part of that, we see a bigger role for private sector involvement and a gradual wind down of non-core assets. So that'll help improve the financial position of Pemex and improve oil production. And also in that context, farm outs are generally seen to be a very important way to go ahead with that. Now, in the short run, the government has provided some support, but that can only provide calm markets for some time. So you need to have a strategy, a business plan, which is well-crafted, well-designed, and credible, and that can put Pemex back in a stronger position and reassure markets.
Thank you, Krishna. So we're going to swing to this side of the room. Alejandro, por favor.
Gracias.
Thank you. Good afternoon. Alejandro Berkovich from Buenos Aires Económico. You said, Dr. Werner, recently that Argentina would have a recovery which would not be spectacular but would be gradual. And I would first ask you, what guarantees can the fund offer that that recovery will take place during the second half of the year, given that the projections, for example, in the agreement signed last year, evaporated in less than 3 months? And don't you fear that the high interest rates of the central bank, yesterday it was 68%, 20 points above inflation, would not aid the recovery? And also on what Christine Lagarde said yesterday, she said it would be foolish on the part of any candidate to abandon the efforts being made now by Argentina. I'd like to ask you, what would happen if a candidate who wanted to be that foolish were to win the elections? Well, perhaps two things, and then my colleague Nigel could continue in greater detail. Clearly, economic forecasts are forecasts, and they are important in terms of their uncertainty, especially in the case of an economy which is as volatile and fragile as the Argentine economy now. So clearly, to forecast these changes in economic trends is difficult, and it is something subject to uncertainty, and therefore our forecasts are subject to these factors. As we are saying now, we are saying that the contraction expected for 2019 may be less than what we had anticipated, because the numbers for January and February were less bad than when we had expected. But as you say, it could very well be that later on we will see the contrary taking place. A factor, as you have well stated, is obviously the forecast we made a few weeks ago. We were not incorporating this degree of financial volatility which we have seen in recent times. We'll have to see what will be the effect of this on the economy and how markets will be stabilized after this repricing in the market and the adjustment in nominal interest rates. With regard to the last part of your question, I would say that we are confident. If Argentina continues with the guidelines which are at the basis of the program's design, Argentina will be able to correct for macroeconomic imbalances to the extent that this correction will generate certainty toward a more dynamic process of investment and growth in the economy. Trust, confidence in maintaining these balances is not something that is obtained overnight, and the countries that have achieved this, many of them have gone through fewer years of uncertainty than Argentina. This is a lengthy process, and once again, we believe that to continue along the lines of correcting for these external and internal imbalances from the macroeconomic standpoint and generating adequate incentives to public and private investment is the right path. But Nigel may have greater detail to add.
On the recovery, I mean, we have some confidence we'll see better activity in the second quarter. We're seeing a start of real wages recovering, which should help support consumption in the country. The second quarter of last year was a pretty bad quarter because of the floods and the decline in agricultural production. So that will naturally reverse. It looks like the agricultural sector is going to do relatively well. And there is some limited government support within the fiscal envelope under the program, and we've seen that in terms of the government increasing social assistance allowances and providing more support, particularly to people who are poor and vulnerable and have a relatively high marginal propensity to consume. So those factors put together, we think, should help support some improvement in activity. Just on the interest rates, yes, it is true that the level of real interest rates and nominal interest rates in the country are a headwind. But at the same time, that's what we believe is needed, and what the system is telling us is needed to establish macroeconomic stability, currency stability, stability in the financial markets. And I think without that stability, it's very hard to see how Argentina can sustainably grow. So I think, you know, there's some short-term cost that is being paid in terms of activity to establish that economic stability. That's very common in a case like this, where you've had a big shift in capital flows and in financial markets. We don't expect that to be a long-lived phenomenon, and the alternative would be considerably worse, I think.
Thank you, gracias. But we're going to go here to James. Yes, please, James.
Thank you. A few weeks ago, Larry Kudlow, the director of the National Economic Council, said that the U.S. was working on a plan to basically flood Venezuela with cash after a possible fall of the Maduro government, with dollars specifically, using even fintech instruments like iPhones and certain fintech apps, and essentially advocating dollarization through this method. How do you respond to that? Is that a possible solution? I know that there's been contingency planning going on at the fund.
Look, we have been working on what would be the needed set of policies to bring Venezuela back to a path of growth and obviously to rebuild the economy of Venezuela so that it can embark on a path that it will correct the huge humanitarian crisis that the economy is going through and eventually start growing back towards its potential in the medium term. And that, I mean, will comprise of many policies that will allow not only the oil sector in that economy, but the non-oil sector in that economy to start working back towards what we see in more normal economies in the rest of the region. As it's always the case in our programs, the exchange rate regime is a choice by the country authorities. And in that sense, at this point, obviously, we have been working in the abstract among ourselves. Once we have a government that reaches out to the international community with a view on what's their desired choice of exchange rate regime, I mean, our work will be to have the consistent set of policies with that exchange rate regime. But that is clearly something that we don't negotiate with the country. We negotiate the conditions to make the regime that the country chooses sustainable with the rest of the economic policies. So in that sense, obviously we are working with different alternatives, but that is something that for which really having authorities on the other side will be crucial in the design of the program.
Thank you. We're going to go to the lady right there in the third row, and then we're coming to you, sir. There we go.
Buenas tardes.
Sí, stop.
Sí, Mónica Orozco.
Mónica Orozco from El Comercio in Ecuador. I was looking at the funds forecast. This year they expect a contraction, and next year there will be low as well. So I'd like to know why, since when the agreement was signed, the forecasts are that negative, and does Ecuador need to get used to it, and for how long will these be low rate? We have these low rates of growth. And also, since we are having a tax reform, what does the fund expect of these structural and tax reforms for Ecuador to begin in the path of growth? And do you think we need to increase the VAT to do this?
So the contraction in Ecuador, I mean, Ecuador also is going through an important macroeconomic adjustment. And I think our sense, the combination of those forces that the policies will create, including the adjustment on the fiscal side, will be a short-term headwind to the economy. However, this is sort of a necessary shift in policies, given the way the debt dynamics have been evolving of late in Ecuador. They were on an unsustainable path, and there needed to be a correction in the direction of policies. Now, I think you'll see in the program documents, we actually gave a range of growth from plus 0.5 to minus 0.5. In any situation like this where you're doing a pretty significant shift in policies, there's a lot of uncertainty about exactly how quickly those policies will feed into the economy. Here in the WEO forecast, we take the conservative end of that range, but we think it could be anywhere within that range is feasible for this year. So the point, I wouldn't focus too much on the point estimates. I mean, we think there will be some drag to the economic growth. It may be a little bit negative, a little bit positive, but somewhere in that range. We think this is relatively short-lived as well. The economy will, as the system stabilizes, as the greater confidence returns in the fiscal policies of the government and the structural policies of the government, we think that we will see a recovery in Ecuador. And we're already starting to see some benefits from the announcements of these policies. Financing costs for the country have declined, the risk spreads for the country have declined. So that's going to help, I think, provide a greater openness to capital inflows and support credit and growth in the economy. On the tax reform, I think there's going to be a discussion. There'll be a review mission in May to discuss the first review of the program, and I think we'll be working with the government on the technical details of the tax reform. I don't think anything's been decided yet of what the content. I think there's some broad principles outlined in the staff report that we would like to see a more efficient tax system to support growth. We'd like to see a simpler tax system, a more equitable tax system. As to the individual measures, those will be decided by the government. They have the full ownership of deciding how that tax reform will be designed and legislated. The fund's role is to provide technical advice and then ultimately just to make sure that the whole fiscal system adds up so that there's enough revenues being generated by that tax reform to fill the needed financing in the budget.
Thank you. So we're going to go to this gentleman right there and then continue.
Thank you very much. Marlon Madden, Barbados today. To what do you attribute the very low to negative growth in the Caribbean? And I ask against the background that some countries are currently under an IMF program. And what steps would you advise that's needed to spur growth, given that these economies are very small and open and are susceptible to external shocks? And how do you see, to what extent do you see the trade tensions in the US and China impacting on the Caribbean, given that we depend on the US especially to carry out trade?
I mean, maybe my colleagues can jump in afterwards with more specific answers. But, I mean, we're expecting positive growth in the Caribbean, and most of the countries in the Caribbean will be experimenting positive growth next year. I mean, Asim maybe can talk a little bit more about Barbados, that it's maybe the only country that will have a very slight negative growth, but also mainly it will be growing at zero. I think the Caribbean has been having an acceleration in growth in the last 3 years on the back of an important resumption of tourism, also investment. And in the commodity-dependent Caribbean, I mean, we have seen that most of these countries have already absorbed the significant decline in income coming from commodities after the decline in commodity prices, and now all of them are coming back to growth. I mean, obviously, the Caribbean continues to be a region within Latin America that it's also, I mean, exhibiting not sufficient growth to satisfy the demand of the population and the needed increases in social indicators. Also, I mean, we have seen many countries in the Caribbean struggling on managing high levels of debt. And finally, the Caribbean, it's obvious. I mean, it's a region that is heavily exposed to natural disasters, that has a very heavy humanitarian toll when these countries are hit with them. But then, after some years, it leaves these countries with an important financial burden that needs to be worked out in the future. So we are developing frameworks, financial frameworks for countries to manage financial implications of natural disasters in a much more effective way. We're also trying to advocate for much more ex-ante financial support for these countries instead of exposed after the natural disasters hit, so that these countries are better able to manage these risks, are in a better position to invest in natural disaster resilient infrastructure. And that's what our teams are working with many countries in the region, but obviously it's work in progress. In terms of our programs in the region, I mean, I will highlight that we are on the last stages of the Jamaica program, that, I mean, it's leaving the country with a significantly lower level of debt than the one that the country had when we started this program. I mean, the country is also experiencing, I think, a decent acceleration of growth, historically low unemployment rates, but obviously still have, I mean, significant financial, economic, and social challenges. But the last 6 years have been years in which Jamaica, I think, has shown it, or the different Jamaican governments have shown the Jamaican people that you can deliver on financial discipline without a significant cost in activity, that the benefits in activity and employment take time to materialize, but when they materialize, they do it in such a fashion that it's much more sustainable, and it lends itself the foundations for an inclusive and sustainable growth process. And maybe, I mean, Asim can say something on Barbados, that it's just started its engagement with an IMF program.
Yeah, thank you, Alejandro. So, as you know, the Barbados program started late last year, and we will shortly be conducting our first review mission of the program next month, I believe. So, Barbados has had building and very large external and fiscal imbalances, and that has resulted in very high vulnerabilities building up over the years. Growth actually had already been negative for the last couple of years, and our forecast for the moment for this year is just slightly negative growth, 0.01, so basically flat. But that marks a recovery from the past, and I think part of that is the start of new policies that are putting the economy on a sounder footing. The big, of course, headline going into the program had been the very high level of public debt, 160% of GDP, and very low level of reserves. Those two issues are being addressed under the program. Debt is in the process of being restructured. The bulk of public debt, which is the domestic part, has already been restructured, and negotiations with external creditors are underway. With this in process, fiscal consolidation underway as well, and deep structural reforms also being undertaken, the economy is on sounder footing. Reserves have almost doubled already since the start of the program, and public debt is on a downward trajectory. So we hope that in future years, growth will also return.
Thank you, Asim. So we have time for 2 more questions. We're going to go lady here and then.
Hi, good afternoon. Paola de Orto Globo. I'd like to ask, as regards Brazil, why did you diminish the growth forecast for 2019, whereas at the same time increasing the prospects for next year? And also, there are news today about Brazil's government decision to postpone fuel price adjustments in Petrobras. So I would like to ask if this kind of policy will impact your next forecasts.
So in terms of why we lower the forecast for this year, again, like I said, in the case of Mexico, the Q4 numbers for Brazil were weaker than expected, and that carried forward. And going forward, we expect some, once uncertainty dissipates about policies and so on, we expect investment to pick up, and that should lead to better growth prospects. I didn't follow the second question. What was the second question?
Fuel price.
Well, we have to see how that policy in itself affects the forecast. But clearly, Petrobras was being, the prospects of Petrobras were improving. So any kind of change in that will undermine the prospects of Petrobras going forward. How that factors into our growth forecast, we'll have to see. And so it's very hard for me to tell you at this point whether we'll adjust our forecast one way or the other. There are many factors which go into building a forecast. So,
okay. So we're going to end with the lady in the back, Sylvia. Yes.
Buenas tardes.
Good afternoon, Silvia Rodriguez from El Comedio from Mexico. Would you please explain that within your models where you develop your growth forecasts, what factors do you take into account, not just in 2019 and 2020? Because at the end of in the annex, there is a table where you show longer-term forecasts, and at one point they specifically mention growth in 2024 is 2.7%. That's far from the 4% expected by the federal government at the end of the 6-year period. So I'd like you to explain what factors you take into account, because the Minister of Finance has said that it's very risky to do long-term projections and that those numbers are just guesswork. So I would like to know what elements you take into account to find out that they're not a guesswork. From the methodological perspective, in that table that appears on our projections for the world economy, the different teams and actually, at the end of the day, in order to do a lot of economic projections on, say, debt sustainability, investment potential, the two economic agents that influence an economy, you need to have some sort of medium-term projections. Obviously, for many of the economic variables, the longer the period you're projecting on, the more uncertain the projection can be, that forecast can be. So that's why we kind of agree with what you said. Your question is what factors are involved in this forecast. Well, for this, cyclical factors are much less influential than short-term factors. Was going to be fiscal growth or not, that affects the next year more than in 2024. Monetary policy, say in 2024, would be in a neutral situation. But the factors that we feel are more important to calculate the potential for growth in an economy are the reasons for why investors invest in a country, the growth of the population, the level of education or how much education there is, and also another factor is the structural strength of a country, the level of openness to trade, the level of education of the population, and of course, for many of those factors, we have to base ourselves on exogenous forecasts that are the result of the trends that we've seen in the last few years. Now, if there should be a reform that takes place, we take that into account with certain assumptions of what impact these changes will have on the central scenario of that economy. For instance, if you take into account the pension reform case in Brazil, I'm quite sure the Brazil team, as part of their key scenario, will assume that the pension reform will be approved this year. Over the medium term, that's very important because that can end up affecting the rate of savings in the economy, and the rate of savings in the economy will affect investment, and investment affects capital. So, and it makes it an economy that has a greater production capacity. If you have an educational reform in a country, same thing can happen. We will assume that that reform will improve quality of human resources or the educational coverage in a country. There are economic models that have been made by many academics who level the impact by increasing human capital and the impact that has on economic growth. Those are the factors we take into account. Those are the models we use. Now, where there may be a significant difference, for instance, in the case of Chile last year, it has happened to us. The Chilean government included the effect that all reforms that were in their government platform and the impact they would have, but they had not yet been implemented. So our key scenario did not include those reforms. And most likely, when our team goes down to Chile, they will include them. But they will probably include them in a sequence, or the economic effect will lag behind the government's assumptions. And that's where you will see the differences. Well, thank you very much, Alejandro. I'm sorry. I just want to understand, with the variables that you have so far, even though they are subject to things that can occur over time, your variables do not include a growth of 4% taking place in Mexico? Well, I think what's important to keep in mind as well is that that projection was made probably when they reported on Article 4, they prepared the Article 4 report last year. So basically, the assumptions for medium-term prospects were the assumptions that existed at the time. But our team that covers Mexico and will be going to Mexico the second half of this year will be assessing the economy, and will have an ongoing dialogue with the government, and will be able to include all these things in their medium-term prospects. Okay, well, now we have concluded the press conference. Thank you very much for being here with us. Thank you.